Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, where we will help you learn to invest in about 20 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm very good, Bryce. How are you?
Good. We've made it through the grand final, so I guess sad because it's the end of the footy season.
Yeah, I know.
It's always a tough time of year.
The longest point before we get more footy.
Yeah, very true.
Yeah.
But we're going into trade period soon, so that's another thing to look forward to.
Yeah.
But Eagles, they won.
And NFL Week 4 has just wrapped up, so it just kept going for me.
You. How's your team going?
Yeah, not bad. We beat the Patriots last week, but we're 1-3. So aside from beating the Patriots, we haven't done that well.
Not a good start. Long season though, isn't it?
Not really. We're a third of the way through. No, a quarter of the way through.
Okay.
Yeah.
So room for improvement.
Definite room for improvement. But since I've been supporting them, there's been plenty of room for improvement.
Yeah, nice. Well, I guess we should crack on with our
Yeah.
good win by the Eagles. Everyone should know that we don't support them, but yeah, it was a good game. I think that's what was most important.
Yeah, and it was a cracking way for them to win. That from the specky from McGovern down the line to that goal. Yeah, it was a good grand final.
It was great. So, end of the football season, end of September, start of October, new episode, new segment to discuss and talk about, Ren. We've brought in Ask Us Anything, which, if you've just joined the show, on the last episode of every month, we now dedicate that period of time to answering all questions that have come in from our listeners, from all our equity mates out there via social media or through our forum online, Ask Us Anything. We'll answer as many as we can. And if we can't do it, then we're going to get our network of professionals who we've met over the last sort of 18 months or so to answer on our behalf. And that way we can make sure we get the best answers out to you guys. So Ask Us Anything is on our website. If you need any questions, hit us up there. But Ren, now we're going to also be dedicating the first episode of each month to the Equity Mates Book Club.
Yeah, that's it.
Talk us through it.
We figured now that the footy was done, we had some time to dedicate to reading.
Yoo-hoo!
So, we always ask in our interviews, what are 3 books that you'd recommend? I don't know about you, Bryce, but for me, just reading investing books, reading business books has been the number one value add, I guess, in terms of building my investing knowledge, building a perspective, and just learning about the industry, learning about how to invest, what to invest in. Reading articles is great. Reading thought starters is really great, but nothing compares to reading books. I think there's just something about long form writing where people can develop an argument, build a case for whatever they're doing, rather than trying to fit it all in, a newspaper headline, a newspaper article, or some clickbaity article, or whatever it is. I think there's just something about books that are really valuable, and we both have pretty long lists of books we want to read, so we figured why not do it together and do something that we can sort of share it with the listeners, and hopefully encourage some of our listeners to join our book club to read along with us. We'll have 1 book a month. As you said, we'll announce it in this episode, and then on the first episode of every month, we'll debrief. We'll talk about our thoughts of the book, and then we'll announce the book for the next month. Yeah.
So, as you said, a lot of the expert investors that we've interviewed have all said read. So this is hopefully a way that we'll encourage all of our equity mates out there to read as well. And sometimes, wading through huge lists of top 10 business books or investing books and whatnot can get quite overwhelming, and it's sometimes difficult to know where to start. So if you are having trouble or you'd like to get some inspiration, this is probably one of the best ways that you'll be able to do that. So Yeah, as you said, Ren, we'll announce it at the start of each month. We'll put it up on our website, and then Equity Mates can read along with us. So, very briefly, this month, Ren, we're going to be reading
Liar's Poker by Michael Lewis.
Okay.
For those of you who aren't familiar with the name, Michael Lewis wrote The Big Short, and he also wrote Moneyball. He's written a bunch of really well-renowned books, but also just really easy to read books. This one, Liar's Poker, was his first book, and it's about Wall Street and, in particular, Salomon Brothers, where he worked in the 1980s.
Saucy.
Yeah,
should be good.
It's got really good reviews. It's apparently a pretty easy read, and
that's what I like.
Pretty entertaining. So,
are there any pictures?
No, but I can draw you some if you want. No, look, I think the important thing with this book club is we're not going to be, pulling out security analysis or like
no.
Introduction to Quantitative Valuation Volume 3. We're not
Volume 2 though.
Yeah, maybe. We're not picking books that we're not picking textbooks. We're picking things. It's a book club. Your standard book club is just an excuse to have people around, have a couple of drinks, and catch up with your mates. And this is going to be no different.
Yeah.
So yeah, look. It's just a good way to get reading, so join our book club.
Yeah, absolutely. So we've kicked off now, and we'll be discussing this in a month's time.
Yeah.
All right, Ren. So this episode is all about some things that are close to the hearts of millennials. We thought we would revisit what's going on with Tesla at the moment. There's a lot been going on since we last spoke on air about it in particular. And we're also going to talk all things pot stocks.
Yes. Millennial investing. This is the episode.
Millennial investing.
Yeah. Every good millennial's portfolio is 25% Tesla, 50% pot stocks, and then 25% crypto, right?
100%.
Yeah. Yeah, good.
So let's start with 25% Tesla.
Yeah.
A lot's been going on. He's had a $27.5 million tweet, or $55 million if you want to include what Tesla has to pay.
Yeah. So we last did a Tesla maybe 4 months ago.
Yeah.
And we were then talking about Tesla having some trouble meeting their production targets. They were trying to produce 5,000 Model 3s a quarter, and they were struggling to do that. In the intervening time, they still haven't hit their production target. I think their results, their most recent quarter results, come out very soon. But instead, I don't even know how to describe what we've seen. We've seen maybe a little bit of a meltdown.
An absolute collapse.
Yeah. So
of a CEO and chairman.
It all started with a tweet, as all good stories these days do.
Yes.
Elon
invest in Twitter.
Yes.
That's another story.
Elon tweeted that he was going to take Tesla private and he had secured funding. And those two little words, funding secured, has got him in a whole lot of trouble.
Yeah.
Because he didn't have the funding secured, as it turns out. And it is illegal to lie to the market and try and manipulate the stock price.
Well, it was also not just the funding secured part, but the fact that he also put a price on the share that on the value of the company that he was going to take it private at $420.
Yes.
Which was well above the current trading price at the time. So that was definitely seen as trying to manipulate the share price just as much as lying about the fact that he'd had some Saudi princes or whatever it was.
It's probably worth touching on. So the $420 a share, he then later claimed was a 20% premium on the current share price, rounded up a little bit. But it sort of come out afterwards that he actually chose $420 because he thought his girlfriend would appreciate the pot reference. So,
well, there was rumors circulating that at the time he did the tweet, he was actually high.
Yeah.
I mean, that's all hearsay. But
well, it wasn't even a rumor. It was Azalea Banks was at Elon's house looking for Elon's girlfriend Grimes and couldn't find them, so just started posting all this stuff to Instagram, including that Elon was high on acid when he did that tweet. So
there you
take
go.
that with multiple grains of salt. But yeah, so he tweets. He then scrambles when people start calling him out that he's trying to manipulate the market. In the last, we won't get into it this time, but in the last episode we talked about the convertible debt that Tesla carries and the reason why Elon needs the stock price to keep ticking up. Because otherwise the debt burden becomes insurmountable.
Too much.
So listen to the old episode if you want that breakdown. But yeah, so he tweets to try and keep the share price ticking up. People call him out, and then the SEC, the Securities and Exchange Commission, start investigating. And last week they came back and they
sued him, essentially.
They sued him.
For 55 million, I think 55 million Aussie or whatever, or close thereabouts.
Well, hold on, no. They sued him to get him to. They wanted to remove him for 3 years as the head of a public company.
Yes, which they have done.
Well, hold on, no. So they wanted to remove him as CEO and chairman, and that he couldn't be an executive of a public company for 3 years. But then it came out over the weekend that he settled with the SEC. And then the settlement is $55 million. So half Tesla has to pay and half Elon personally has to pay. And then he's stepping down as chairman of the Tesla board, but he remains as CEO.
Yeah.
And then Tesla also have to appoint 2 independent directors as well to fill out the board, because the board's pretty stacked. It's like Elon and then Elon's brothers on it.
All his buddies, yeah.
Yeah. So, what do we reckon?
I guess the good news that might come out of this is someone in the running to become the next chairman is actually an Australian. She's on the board of, she's the CFO of Telstra at the moment and has been on the board of Tesla for quite a period of time now. Forgive me, I can't remember her name, but she's in the running for next tilt at chairman. So that would be kind of cool from an Australian perspective. I think when the news came out that the SEC were after him and that then, that they were going to sue him and he was sort of pushed to, lose his job as chairman, and luckily he did settle, because I think from our point of view, Ren, it would be quite sad and a bit unfortunate to see him lose his company and have to step away from something that he's built for so long. Understand that maybe what he did was wrong and not in the best interests of investors and that sort of stuff. But it would be quite devastating to see him lose Tesla and then potentially have ramifications on SpaceX and that sort of stuff. So I guess the outcome, he's had to pay $55 million, or Tesla and him have had to pay 55, and he's lost his role as chairman, but thankfully he's still CEO. So hopefully he's learned his lesson.
Yeah.
And he should stop smoking pot on live podcasts on YouTube.
Although, have you listened to that whole... So the context there is...
pretty much all of it.
Joe Rogan has a long-form podcast, and Elon was interviewed and smoked pot on it. In California, where it is legal recreationally, so technically he didn't break any laws, but obviously he's the CEO of a publicly traded company, so probably not the best law.
No.
But I listened to the whole interview, and I'm still bullish on Elon. Like, I don't know if Tesla will survive, but as Elon, as a person in, our generation, well, not our generation, but, this day and age, I think he's important.
I agree. Look, I agree, but he needs to get a new PR agency or someone to really rein him in that side of things, because as brilliant as he may be, he needs to be able to articulate himself to a wider group of investors a bit better than he has been doing, and control himself in the public domain a bit better, because look where it's landed him.
Yeah, I know. But at the end,
not to take away anything from him, but if he's, you would hate to see it all fall apart, whatever it may be. It might not be Tesla, it might be something different, but you'd hate to see it all fall apart just because, he's an incredibly intelligent man, just can't keep his can't keep it under control at some periods in time.
I don't know. Like, obviously, the smoking weed and stuff, we can live without that. But Elon is Elon, and Elon's always been Elon. Like, when he started Tesla and when he started SpaceX, everyone thought he was nuts. Everyone thought his predictions were crazy. He constantly missed deadlines. But just from, like, sheer force of will, he built these two companies. Tesla doesn't have a marketing budget. Like, you don't see ads for Tesla. Like, Elon is the marketing for Tesla. That company is just a reflection of him.
Yeah.
I think we're very quick to put down, eccentric people when they fail, and we're very quick to celebrate them when they succeed. But in some cases, you can't have one without the other. Just because recently he's had a really bad run of things.
Yeah, I guess it's those things that are in some degree preventable. But anyway,
what I'd love to see is Elon be the visionary and then someone else be the CEO. But you look at all of his past, and there's a reason that he never wants to give up being the leader. His first two companies he was CEO of, and he got booted out by investors. Zip2 and then PayPal, or an early version of PayPal. So you can understand that now, he's on to company 3 and 4, SpaceX and Tesla, and he's worried that history is repeating again. So
he needs to learn from history.
I know. Yeah.
There's a reason for that.
Yeah.
Anyway,
so that's the Tesla update.
Yeah, that's update number 1. Moving on to the second part of every millennial portfolio. Speaking of pot, we're going to talk about pot.
Yes.
So Ren, pot has been on an absolute run of late.
Yeah.
Didn't start the year so well. So I guess we just want to run through where pot's at the moment, a couple of the companies that have been doing very well, and a few reasons why we think the pot industry is where it is at the moment and where we think it might be going. So for me, Ren, I guess it all starts with Canada in, what is it, 15 days time or something like that. I can't remember the date, maybe 17th of October. They will be lifting all sort of laws on marijuana, and it's going to be fully recreationally legal. And they're going to be the first country or industrialized country in the world to have approved the sale of cannabis for recreational purposes. So that's exciting for Canada and for pot growers. And it's probably half the reason. There's a few other reasons that we're now seeing a massive jump in prices of cannabis and, cannabis companies, I guess.
Yeah, so basically what we've seen, and the reason we're talking about it now, is since early August, a lot of the big marijuana companies have basically doubled in price. So if you were riding this green wave or whatever you want to call it for the last couple of months, you would be very happy because you probably have made 100% in your investments. And yeah, you're right. Like, a lot of the driver of that growth has been legalization in Canada. Because a lot of the big publicly listed companies are in Canada, but it's not the only reason.
No.
What we've seen is a lot of the more traditional vice industries, shall we say?
Yes.
So chief among them, beer companies, but also companies like Coca-Cola. Have been investing very heavily into marijuana companies. Yeah.
Yeah, you've got, I think, Constellation.
Yeah.
I should have looked at Constellation.
Brands,
yeah, so they own Corona.
Yeah.
They did a massive deal with a multi-billion-dollar deal with one of the biggest. Is it Kronos?
No, I'm pretty sure it's Canopy. So
Canopy Growth. That's it. Yeah, Canopy Growth.
So they invested four and a bit billion, which this might be wrong, but from memory, it's about 10% of their market cap they invested in Canopy. And Canopy's one of the companies that have doubled in price. They went from $33 in early August, and they're now trading at $63.
Wow.
Yeah. So you'd be pretty stoked if you invested in them.
The thing is, yeah, absolutely. So the thing is, we were investing in MMJ, which is an Australian related pot company, a number of years ago, and it was at a time where a lot of this talk was starting to surface about the potential legalization of pot in Canada, and there was a huge run on MMJ and a few other affiliated companies in Australia, and probably most likely in the US. We just didn't really have a view on it, and so it kind of, you see this, and is this an industry that is incredibly sort of momentum driven is my first question, and is there actually much substance behind a lot of this, or is it just another everyone's getting on, so let's get on board? Because if you look at the start of January, for example, 2018, the index for marijuana plunged by about 40% between January and July, and it's only since sort of the end of July that we're now seeing this huge run. Now, I don't know when Canada announced that they were going to be going legalized. I don't know if you know, Ren, but you'd think it would have been priced in well, a long time ago. So I don't know if you have any comment on that, but I think from my point of view, yes, everything's soaring at the moment, but is it just a momentum thing and we're going to see a bit of a burst, or what's your view?
My view is that this wave is this there's enough momentum behind it that this is going to happen, that the war on drugs will lose marijuana as a target. I think what we've seen in America there's a lot of sort of converging factors, and it's sort of spreading out across the world, but things like just the recognition that the war on drugs has failed, a lot of like the health and wellness movement, and isolating the non-hallucinogenic parts of weed and finding all these, health benefits, Alzheimer's benefits, stuff like that. Obviously the sort of rejection of this mass incarceration movement, and the overly punitive penalties for marijuana possession and stuff like that. I think there's a lot of things that are coming together that are driving this movement, and then you see the results in places like Colorado and California, and I'm sure it will be the same in Canada. The amount of tax revenue the government makes from it. I don't think this is going to stop. I think it will keep going. And so I think the industry as a whole, I'm very bullish on. But I think, as with any industry, there will be winners and losers. And part of the really interesting thing for me is when you see a new industry develop, most of the time it's from the ground up. A new technology comes along, or a new industry is created in some way. And
weed grows from the ground up.
Sorry,
that was
very
really
true.
bad. That was bad.
No, it was good. I like it. But you start, with one customer, one user, and then you grow, and these companies scale up as the users scale up.
Mm-hmm.
But marijuana is this really interesting industry where there is a massive user base globally, and there's global supply chains, and there's the industry exists, but it's now legal, and so the legal industry isn't growing from the ground up and one user at a time, but it's how does the grey and black markets integrate with these legal structures and legal companies. I just think I think it's a very interesting transition that we're living through at the moment.
Yeah, agreed. So I need to do some more research into the particulars of these sort of companies. So I'm looking at like the big ones in the States at the moment: Canopy Growth, Aurora Cannabis, one called Afria, Tilray is going nuts at the moment, and Kronos Group. All of them up, hundreds of percent in the last sort of 3 to 6 months. Now, the question is, as you're saying, the user base is already there. We know the product works. We know it exists, and is it just a matter of now these companies establishing who's the dominant one, who's going to get the market share, or are they all focusing on different things? I don't know if you know much about them, Ren, and are people investing in them just because they want to be on board, they don't want to miss out, or are there particulars that this is something that I need to go away and have a closer look at?
Yeah, so I've had a bit of a think about this in preparation for our episode, and for my mind, there's sort of 3 broad categories, 3 broad ways that you could play this. So the first one is the more traditional investments, and they will be your growers and your dispensaries.
Yep.
And I think the really important thing with that is you don't want to invest in a company that isn't, ideally isn't vertically integrated, but which is where so a company that's vertically integrated would be a grower and own dispensaries as well. But I think the most important thing is that the growers will quickly have their margins squeezed, much like any commodity industry. There's not going to be a lot of pricing power when marijuana becomes a bigger industry and becomes more of a commodity. So I think if you're investing in a company that has a lot of licenses to grow marijuana at the moment and don't do anything else, I think that's probably a losing long-term bet. Just because, as with anything, think about what's the milk in Australia at the moment. Primary producers lose all their pricing power when it becomes a commodity, and when one dairy cow is the same as another dairy cow, in the same way that one marijuana plant will be much the same as the other one, then there's probably a losing bet. So that's the first category, is the traditional, like the growers and the dispensers, and in that case, look for companies that are vertically integrated, that are growing, producing and selling through their own supply chain, because they'll have more pricing power and be able to do more interesting things. The second way to play it is the like related services. And so, they're things like there's a big industry around providing financing and banking to these companies at the moment, because federally they can't use any federal banks in America because it's still illegal federally. And similarly, like compliance and tax plays for servicing this particular industry. There'll be a bunch of testing that needs to go on, and I think I was listening to a podcast this morning, and they were saying there's 3 big players in that industry. They're all private at the moment, but if they grow, they might become public. And then there's a lot of stuff around the health and wellness category and using cannabis extract and CBD and stuff like that for like health applications and stuff like that. And then another one that is really interesting is a REIT, so a property, a real estate investment trust.
Real estate investment trust,
It's called Innovative Industrial Properties, and what it does, it's bought a whole lot of facilities for marijuana dispensaries, marijuana growers and stuff like that, and then leases them.
It out.
Yeah. So it's particularly focused on that industry. So a bunch of different options there, all of the sort of other services that service the more traditional growers and dispensers. And then the third one, and the one that I probably like the most and I'm probably going to focus on the most, are the acquirers. And so, we touched on some. Constellation Brands made a $4 billion bet on Canopy Growth. Coca-Cola, I can't remember which one they invested in, but they made a big bet in one of the marijuana companies. It might have been Tilray. Do you remember off the top of your head?
No, I can't, to be honest.
Yeah, okay.
Anyway, may have been Tilray.
The one that hasn't been discussed, well, they haven't made any moves, at least as far as I can tell, but I reckon is one to watch, is Philip Morris.
Okay.
The cigarette company.
Interesting.
I mean...
What have they done?
Well, I don't think they've done anything yet. But if you were thinking about a company that has heaps of cash, is in a dying industry, and has the sort of specialization and supply chain to enter this field, you would probably think that Philip Morris, which grows tobacco, turns it into cigarettes, and then sells it throughout the world, is pretty well set up to stop growing tobacco and grow weed instead.
Yeah, not bad.
So, I mean, I'm not sure that ethically I would want to invest in Philip Morris, and I haven't read anything about them getting involved in the industry, but we have a habit of making calls that end up coming true, so
we do.
Put that one on the record. I reckon we'll hear something in the coming years. Because, I mean, at the end of the day, they make so much cash, and what are they doing with it?
They've got to do something with it.
Yeah,
not a lot. All right, well, we'll mark that in our diary, Ren, as another moment that we made a big call, and if it comes true, we'll jump up and down. let's leave it there. That's a good summation of where Tesla and pot stocks are at the moment. Two very relevant talking points at the moment. And as you said, probably considerable parts of some millennials out there. I certainly don't own any Tesla or directly any pot other than a bit of MMJ in Australia. I'm not sure about you, Ren.
Yeah, I still own MMJ from a couple of years ago. To be honest, I wouldn't be looking at buying any pot stocks anytime soon. I mean, they've already doubled in price in the last month. I'm not sure that...
You never know.
You never know. You never know.
Could
But
keep bloody running.
yeah.
Anyway, so let's leave it there, Ren. Just a quick shout out to all of our listeners, all of our equity mates. Obviously, thank you all for listening. We obviously couldn't do it without you, and love getting all your feedback and questions. If you can just take a quick moment to rate us on iTunes or whatever your podcast platform is, and leave a comment, we would really appreciate that. It goes a long way to helping us crack the charts. And Ren, we've cracked the charts in Australia. We're in the top 20. We're top 25 in business. So we're pretty pumped about that. And yeah, we would really appreciate if you can just spend a moment or two leaving a comment and rating us on iTunes. So please do that. If you don't know how, it can be a bit tricky. Hit us up and we'll give you some instructions. It's pretty straightforward. So I appreciate you all listening, and we'll leave it there, Ren. We'll chat next week.
Sounds good.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mates.